people are still sitting on silver that they bought at above these prices that are waiting to break even and are going to dump their silver? Very, very few, and most of those people are absolutely convinced that it's going to far higher prices than this, and so they're not going to sell anyway. So that means it's only the technical traders looking at this. It's 14-year-old weak resistance. And that means that when it does get to some of these peaks, we're going to see a little chop and a pullback and a little chop, but pretty much it is clear sailing to here from here. And I think that we are going to be seeing $48 silver. You know, there's going to be a $10 move coming up very quickly here. Let's get to silver now. You'll notice that there's the COVID crash, and there is the cup and handle, and there's the inverse head and shoulders. There is, multiple hits on trying to break through. So it's not the same triple top that you saw before, but you can consider that the neckline. And if you flip that upside down, it's the predicted move. Again, notice the date, April of 2024. But we ran into some resistance there. There was the previous peaks. And so this is the update that I did for Investor Summit at Sea of June 20, 2025 is this chart. And you can see the resistance that we had run into that sort of stopped the progression. And then when it finally busted through that resistance, we were at $36 then, but it ran into this resistance that was 13 years old. And that resistance was a 37.46 high and 36.89 close. The high was actually the day after the highest close. It closed 36.89. Next day it opened and it bounced around and made a high of 37.46 and then closed down in the 34s actually on that day. But that was the resistance that we were running into. Now this is mostly technical analyst resistance. There's technical analysts looking at this, betting that it's going to hit this resistance and go down. And they're right. They cause themselves to be right. If there's enough people looking at this and trading off of it, it's a self-fulfilling prophecy. And so this caused it to do a little bit of a pullback. But when you actually look at the real resistance, the people that bought back then, that are waiting to get back to even, this was only 2 trading days. So it was nothing. It was bound to fail and fail quickly. And so it did today. This is July 11th, 2025, and there you have a close of 38.47, but an intraday high of 38.53. So this just blasted right through the previous resistance that you see here in the 37s, 37 to 37.20. Now let's take a look at a longer-term chart as of today. So we're at 38.47 close, and this is the previous high where it had run into resistance before, and we have cleared that significantly. I mean, we blasted right past it. So now we're at highs. Instead of 13 years, we're now at highs we haven't experienced for 14 years. But let's take a look let's do a close-up on this area right here. And so that's this chart. And what you see here, the main things that I want to point out, there's that high that caused us to stall in the 37s and then go up. And like I said, the highest intraday was the second, I can't remember the date, but the second one of those 2 little bars there. The first one was the highest close. But where we are today here, the reason I want to point this out is look at this. There's only about 3 months of trading that occurred at higher prices than this. And it's 14 years ago. So how many people are still sitting on silver that they bought at above these prices that are waiting to break even and are going to dump their silver. Very, very few, and most of those people are absolutely convinced that it's going to far higher prices than this, and so they're not going to sell anyway. So that means it's only the technical traders looking at this. It's 14-year-old weak resistance. And that means that when it does get to some of these peaks, we're going to see a little chop and a pullback and a little chop, but pretty much it is clear sailing to here from here. And I think that we are going to be seeing $48 silver. There's going to be a $10 move coming up very quickly here, I believe. Let's zoom in on this on the old chart. You can see the cup and handle, the 2011 peak. It was at 28.33 then. There was the cup and handle. There's the resistance. There's the inverse head and shoulders. I said I believe that we are headed up to these prices. Now, when it does hit the $48 to $50 level, you're going to see it probably be repelled and it'll chop sideways a little bit. When it blasts through it, we're in clear air. And I've pointed this out many times before. And I believe that I was the very first person to notice this. This cup and handle is inside of a 50, it's from January of 1980. So it's a 45-year cup and handle. And this is predicting moves that are huge. And I'll get to those in a moment. But here's same cup and handle and an attempt that I made to draw it on a trackpad. It's not easy. There's a little bit better cup and handle that fits it. Now, this is a snapshot of a page from the Kindle version of my book, The Great Gold and Silver Rush of the 21st Century. And in there, I said that silver was in a bubble in January of 1980. But because of the economic storm that is coming, because of the coming economic storm, which, by the way, we are in right now. It's happening. But because of the coming economic storm, I believe that they are destined for bubbles far greater this time around.
This comes as no surprise to those following long-term trends in monetary expansion and asset inflation. Silver remains one of the most undervalued assets in today's financial landscape. Mike Maloney illustrates this by comparing silver's historical peak in 1980 to how various other assets and indicators have grown since. If silver had tracked the growth of the money supply, real estate, or the broader stock market, it would be priced several $100s higher per ounce. Even conservative comparisons, like the Consumer Price Index, suggest silver should sit near $200 per ounce, while other benchmarks like the Wilshire 5000 imply values in the thousands. When all these metrics are averaged out, a theoretical price of around $921 per ounce emerges. While Maloney isn't claiming silver will necessarily reach that number, the takeaway is clear. At its current price, silver is still drastically undervalued when measured against the financial backdrop of the past 4 decades. Maloney further highlights a critical imbalance in the physical market itself. For the last 7 consecutive years, global demand has outpaced silver supply, with deficits reaching hundreds of millions of ounces annually, especially once you include silver removed from markets via exchange-traded products. These are not minor fluctuations, but structural shortfalls that can only be corrected by higher prices. He also points out that much of the silver mined each year is consumed in industrial applications. Unlike gold, it's not easily recycled or stored in vaults. Compounding this is the gold-to-silver ratio, which remains historically high, meaning silver offers a far better return potential if the ratio reverts to historical norms. Maloney believes that, once momentum builds and investors recognize the supply-demand imbalance, silver prices could rise significantly, potentially overshooting fair value as the market recalibrates.
As of 3 years ago, the Consumer Price Index, 3 years ago, predicted that silver would have to be $200 an ounce, $200 per ounce. That was the prediction 3 years ago. Has there been inflation since? A single-family median price home, $468 per ounce silver. If it had turned in the same percentage increases as single-family median price homes. The Wilshire 5000 Stock Index, this one will blow your mind, 2,100